Okay, recording now. It is February 4th, Accounting 201, and this is a test review. Do you guys have, I want to give you an opportunity to ask if you have any Canvas questions. I also want to say our team contracts are due on Friday. They don't take very long, but you probably need like a 1 hour meeting with your team. And before you meet, you should make sure to read the instructions. You're doing the team contract to divide up the work on project number one, mini project number one, and that is your business model analysis of two companies. This will be non-financial. You'll be looking at what type of business this is. And remember, there's two businesses on your team, two companies on your teams for each team, so you can compare them and what their products are, what their customers are, what their strengths, weaknesses, risks, and then you'll get into other factors like governance. And then you'll go out to the library and do a little library research on what is thought about those companies, non-financial. And then you'll do a brief video and turn in a PowerPoint with a link to the YouTube video and some speaking notes. So, but the contract is due Friday, and the project will be due, of course, after that. Our exam is tomorrow. I've already sent you guys an email saying if the campus is closed tomorrow, I will move the exam online. So just be checking email tonight, checking Canvas email, Bellevue College email, etc. And this time is wrong. It's 1:30 in room C208. So 1:30 tomorrow, Wednesday, February 5th in room C208. Okay. So let's see, this is from last time. So I'm gonna switch briefly to our calendar just so we have it in front of us and we can take a look at that. Maybe it'll be slowly to our calendar. It's loading. Come on, Canvas, you can do this. All right. All right. Can you guys see the calendar here?
Yes.
Perfect. Thank you, Eric. I'm going to load our class. Okay. So as of tonight, and for all our exams, the night before the exam, I have the account ID quiz. So we have account ID quiz 1 before exam 1, account ID quiz 2 before exam 2, and account ID quiz 3 before the final. Okay, so that's just like flashcards, a normal balance, debit or credit, and what statement an account is on. So for example, cash, normal balance, debit, and it's on the balance sheet. And you can take the account ID quiz up to 10 times and it'll save your highest score. And then these, I always put the practice homework. You can keep doing it up till the exam. And the practice homework is required, but it's very low points, like less than a point. All right, exam tomorrow. We do have, hoping there's no more snow days this week. We do have University of Washington Foster Advisor on Thursday at 1:30. I know a lot of you are thinking of transferring. Some of you are running START and doing freshman admits. This is going to focus more on transfer, but I have to tell you, we've had students who got rejected as freshman admits turn around and get to apply a second time as a transfer student. So you get two shots at it if you're doing freshman admit. We also have two alumni, Jake Keene, who's over at UW studying finance, and Mary Mitchell, who's graduated and worked for Boeing and now is running her own company. So it's a great opportunity to ask questions and hopefully won't be canceled due to weather. Okay. All right. Your exam will be tomorrow. On Monday, we have our normal office hours. I have my normal office hours at 1:30, but I'm adding 11 a.m. office hours. So after my exams, y'all come in, you just queue up. I take you one at a time for a quick 5-minute conference to go over your exam scores. So you want to make sure to do that on Monday, Tuesday at 1:30, Wednesday at 11. If you don't make those dates, we can work around your schedule, but ideally those 3 days and those 4 times 11 a.m. Monday, 1:30 Monday, 1:30 Tuesday, and 11 a.m. Wednesday. You can drop in for a quick conference. I like to go over the scores with you because I don't return the exams. Okay. Campus is closed on Thursday, and then your status report is due here. So you're going to get your contract in on this Friday, and then you're going to show me some work by next Friday. Okay, that's a lot of announcements. All right, so let's go back to, I want to go over the financial statement project exam. All right. So journal entries are a big part of this exam. So chapter 1, 2, 3 are the major parts of the beginning of the accounting cycle. All right. So the accounting cycle starts with, is this a transaction or not? All right. So we're kind of trying to decide if it's a transaction. If you hire someone, but they don't start for 2 weeks, it's an important event, but it's not a transaction. If you pay someone, then there's been an exchange. And then we have to say cash went down, salary and wage expense went up. So debit salary and wage expense, credit cash. Okay. So what is your biggest concern about the exam? Drop a comment for me in the chat. I'm just pulling up the practice exam, but if you have concerns about the exam, let me know, or areas of concern. Go ahead and put it in the chat. No one has any concern. Ah, here we go. Ah, here they come. So number one, be able to write an essay on the trends of data. Number two, would you be able to give an example of what the essay question might look like? All right, perfect. Okay, that is usually the first question students have on the test review days. Can you talk more about the essay? Okay. And it's communicating accounting information is super important. So, oh, Eric, go ahead.
I just said, yeah, one quick question before we get going on this. I saw a for the calculator. Is it correct that a I think it's an 84 is not allowed?
That is correct. We don't want any programmable
So I just
calculators.
okay. So I just need like the most like a just a basic calculator.
Correct. I'll have
Okay,
a
thank
few
you.
loaners that you can use, but just to be safe, you might want to get one that I always say get a calculator that you're comfortable using, not a loaner, but I will have
Yeah.
loaners if you need it. Good question. Yeah. All right. So, all right. So let's go to the essay first. I'm going to bring up, let's see. I wish I had like 20 screens at my leisure here. So, but I don't. Okay. Let me bring up. I'll have the solution. So let's just go look at the essay in the practice exam. So here's a statement. And I, looking at the discussion board, some of you go into a lot more detail than you need to. Don't go into a lot of detail. I'm being very formulaic for this essay for now. You will get more into detail, but I'm being very formulaic. So you will get a question very similar to this. Discuss the trends in either total revenue or net income. So job number one will be, what line is she talking about? I could ask for net income from continuing operations, and you'd have to find that. Or operating income, which is another name for this. Okay. So your first job is to know what I'm talking about, but we'll keep it to the terms that we've already worked with. We haven't worked with operating income yet, so I'm not going to ask about that. but it'll be areas that you know. So revenue, remember, is another word for sales. Sales is at the top of the income statement. Net income is at the bottom. That's why we have the expression, the bottom line. What's the bottom line? Did we make money or not? So here's net income. Another thing to watch out for, and I mean this really seriously, pay attention to the column headers. January 30th, 11, January 29th, 12, February 3rd, 13, 2011, 2012, 2013. So as you're looking at the data on an income statement or balance sheet and looking at trends, could be total assets, total liabilities. These are all terms you're familiar with. Make sure you know which date is which. In this example, the oldest is on the far right and the newest is on the left. Pay attention to that first and foremost. So let's just quickly say, what's the trend in sales? So you're in the elevator, I turn to you and I say, hey people, what's the trend in sales for cold water dairy? Favorable, unfavorable, neutral, or inconsistent. 1 year up, 1 year down, 1 year up. So put it in the chat, favorable, unfavorable, or neutral. The trends for total revenue over the 3-year period ending 2013. Right. You guys can all see that, right? So everyone in the chat said favorable, and you're absolutely right. Now, don't get hung up on these numbers. These numbers actually are in thousands, which means there's another 3 zeros here, but we can just work with the data as is. So 711, 704,000, 1,839,000, 1,370,358. Okay, I think I said that middle one wrong. Okay. But you can see it was 711, a million, 1,370. It's going up. The trend is favorable. I mean, that's it. And what can we say about the trend for net income? Favorable, unfavorable, neutral, or inconsistent? Also, right? Yep, favorable. 121, 184, 270. I'm not reading those full numbers because it's a mouthful, but you get the idea. We're going up. So favorable net sales, favorable net income. That's actually the hardest part, just figuring that out. Now, step 2, so that's your thesis statement, but say it in a full way that's a little clearer. So what I want to see, let's see if I can come over here. I want a full sentence telling me what the heck you're telling me. So if you just say the trend is favorable, I want to hear let's make this bigger. Can you see both my Word document and the practice exam?
Yeah, we can see both those.
Thank you. All right. So I want a sentence like this. Tell me what years you're talking about. Tell me what element on the statement you're talking about. And then tell me the company name and then your conclusion. So you all answered the trend is favorable, unfavorable, neutral, or inconsistent. You all chose favorable. Great. But I want the rest of this stuff here too. Tell me what you're talking about. I know sometimes students will say, you can see on the chart it's favorable. No, I want a sentence. I want a good sentence. The trend for, and you could word it different ways, but this is the basic elements in that sentence. The trend for Coldwater Dairy's total revenue for the 3-year period ending 2013, ending February 3rd, 2013 is favorable. You could word it different ways. Or Can't spell February 3rd. Okay. I don't know why it's all underlined. Okay. So you've got company, you've got data element, you've got period of time, and you're telling me what the conclusion is. Okay. If you just say the trend for revenue is favorable, you've left out company name, you've left out the years for when. Yeah. All right. So can you guys build a sentence for me for net income? And it's a thesis sentence, right? It's telling me the basics. Oh, Eric, I'm going to correct that. The term isn't not favorable, it's unfavorable, but I wouldn't mark you down for that.
Okay, thank you.
So, Eric, that's true. The 2011 to 2013 net income trend for Coldwater Dairy is favorable. You've got it. All right. So that's your thesis statement. If you look down at the bottom of your instructions, there's your thesis statement. Now you've got to give me numerical and percent evidence to support that that trend is favorable. And then a very brief summary sentence. Okay. So now you have to get into the math here. So let's bring up another file. I want you to give me the dollars. Let's just focus on sales. I want you to give me the dollars difference and the percent growth. Okay. And so you're going to build a sentence and you're going to say between 2011 and 2013, sales grew by dollars and percent. Okay. And let's see if I have this essay. All right, let's take 2013. So what you're going to want to do, and you'll be just writing on your test, you're going to want to take these numbers. Can you see my Excel spreadsheet? I'm assuming you can see this.
Yeah.
Yeah. And I'm doing this in Excel, but you're going to just do it with your calculator. Okay. So here's the 3 years of data. I'm going to expand this. Okay, so can you see that? So there's the 3 years of data. And I want you to tell me how much the dollars grew between 2011 and 2013. Growth in dollars. So of course, we don't have the growth from 2011 to 2010. So we're just doing the growth for 2 years. So you're going to take sales grew 298,000. That's pretty good the first year. Okay. Second year, you're going to do the same thing, 1370 minus, and you can already know that that's a higher growth rate. Sales grew 369. So everybody comfortable on how I calculated that? Anybody need to go over that? All right. Now I want you to calculate the percent growth. Okay. So percent growth, always with 2 decimals. Okay. 92 decimals. No, that's not right. Okay. So how do we do percent growth? Okay. So I'll show you up here. So the formula for percent growth, this year minus last year divided by last year times 100. This year's number minus last year's number divided by last year. And of course, to turn a decimal into a percent, we multiply by 100. So for example, if you were earning $10 an hour last year, and this year you got a raise to $12, your dollar raise is $2, but your growth rate is 2 divided by 10 equals 0.20, multiplied by 100 equals 20%. Okay, so let's go down here and let's do the same thing. So here we're going to take the 289, which is the difference, and divide it by last year. And that's going to come out as a decimal. And with Excel, I can just use the Excel percent formula. I'm going to make it a percent, but I have to have 2 decimals. So when you get a number, so when you key in the number plus 289, 135 divided by 711, 704, you're going to get a number that looks like this. Can you see that number? It's an ugly long number. And I'm going to tell you to round it to 2 decimals. So first you're going to multiply this number by 100. You're going to get this number and you're going to say, okay, I know it's 40, 62, but oh, look, the next number is 5. When we round 5 and up, we round up. If this were 4, we'd leave this as 4062. But no, because of that 5, it's now 40.63%. Okay. So here we're gonna, so it grew. So let's get the other one. Okay. So this is going to be 369,519 divided by 1,000,839. You're going to get this big long number. We're going to multiply it by 100. And we're going to say 3692. This next number is a 0, so we don't round up. Okay. All right. Yes, Eric, yes. You have to be careful when you get into a lot of negatives, though. That can get tricky. All right, so now we have our evidence. This is evidence. You have told me that this is a favorable trend, and here is your evidence. So let's look at how we build the evidence sentences. So we're going to put these over here, and then we're going to say, see, do we have that? Here we go. Net income, I don't have that. Do I have sales? No, I don't have sales. The trend for revenue. Here we go. So evidence has to be your number and your percent. So here we go. From 2011 to 2012, revenue grew by 289, 135, put a dollar sign there, comma, or by, and show the percent growth rate. 40.63%. You don't need to show me the calculation. I just put it in there for your reference. From 2012 to 2013, revenue grew by 369,519 or 36.92%. So that's your evidence sentence. 2 sentences. Growth rate for the third year back, the second year back compared to the third year, growth rate for first year compared to the previous year. No, Brennan, I want you to, that's a great question. The question is, can you calculate these trends by multiplying multiple years at once? So for example, could you just say from 2013 to 2011, the company grew, and we can figure that out too, can't we? We can go. The company grew 658,000 or almost 93%. Okay. Can you do that? Yes, you can put that in if you want extra information, but I want year over year growth rates. And I'll tell you why. Okay. So this is your first sentence. This is your second sentence, pair of sentences. So you've got your thesis, you've got your evidence, and now you need a conclusion. Now, this is phenomenal growth, okay? Just phenomenal, right? So you should say that revenue grew at an astonishing rate for both periods. However, you should tell me that you notice that the growth rate slipped slightly. Okay. The sales growth slightly declined from 12 to 2013. Okay. It grew 40.63% the first year. It grew 36.92% the second year. Fantastic growth, but you should notice that the growth rate is not, and it can't maintain. Okay. Just so whatever happens, that's why we want the year over year. We want to know that it's not as good as it was the first year. Dollars are good, but the growth rate slipped. So because that's going to help us if we were part of that company, that's going to help us with planning. All right. So if you know you're gonna grow phenomenally, you're gonna hire a bunch of people, you're gonna buy a bunch of inventory. But if you know your growth rate's sliding, you might just keep things steady for a while. All right. Any questions about the essay? So the solutions have the sentences in them. Let's take a look too. You can look at those. Yeah, so solutions have that in there too. Okay. And then showing how it's done. So we don't need for you to calculate a bunch of ratios on this essay, not at all. Not at all. I need you to show me that you understand growth rates and trends. Okay. So the ratios you have learned so far are net income percent. We did that on Monopoly. Current ratio and working capital. We also did that on Monopoly. I think that's it as far as what you've learned so far. So, okay. All right. Any other questions just about the essay?
Yeah, I have a quick question.
Yeah.
Where, just as like a general guideline, where would you draw the line between neutral, favorable, and like unfavorable? Like if a company increased sales by only like 20,000% or $20,000, would we call that favorable? Or would that just be neutral?
So everything's a matter of materiality. So how big is the company? 20,000 could be phenomenal for a small business. So
Yeah.
that's
Okay.
why we need those growth rates, because let's say and these same numbers, which look phenomenal here, they could be like 0.5%, depending if it's a massive company, which would be neutral. So
S-
so
Okay.
lean into your growth rates for that. So
So if it's just like one to like, what would like would 5% be neutral, or would we call that favorable? Or does that also kind of come down to the company's size?
well, this is where knowing stuff outside of accounting really helps. So if you are working, has anybody here ever received a raise for pay?
Not yet.
Well, I hope you do. So there was a time when a 5% raise was considered pretty good. So now I think with all the inflation, people are wanting more, but 5% isn't exactly bad. When we look at long-term savings and investments, and the BLC is bringing in an investment speaker on February 27th, if you're interested. Um, but when we look at long-term investment planning, 4 to 6% is a great return if you can average it over years and years. I mean, the last few years in the stock market were much higher than that, more like 10%. But if you can average an overall average rate of 4 to 6%, you're doing pretty good. So I don't know. I think flat would be 1%, maybe 2%.
Okay, sounds
And
good.
then
Thank
and
you.
then honestly, you're kind of evaluating this in a vacuum, Eric, because
Hmm.
what's your competitor doing? Are they having great growth rates and you're not? And we're not
Yeah.
even looking at competitors.
Great.
So
Okay.
yeah.
Okay.
And
Thank you.
if you look at your evidence, so I've had students say neutral when I would say favorable, um, because the growth rates are so high. I've had students say neutral when the growth rates are like 10 to 15%. And I'm like, wow, that's favorable to me. So
Mhm.
yeah, so I would lean into more favorable. Maybe I'm more optimistic, but there's no question that these are very, very high. And actually the company is I changed the name. It was a big growth year for Lululemon. That was that was
Oh,
good.
okay.
Everybody, well, not everybody. All the girls were wearing Lululemon, and they still are, but not at this kind of growth rate. So,
Hmm. Okay. Thank you. Yeah, that definitely answers my question.
okay. All right. Anybody else? Kendra, Brennan, what else? So, a couple things came up with Monopoly. So, um, when you guys make journal entries, okay, let's look at the solutions for those. Now, on the exam, you do not have to put descriptions on your journal entries. For Monopoly, you did. I wanted you to go through the exercise, but for exams, it's just a little tight turnaround. In real life, if you become an accountant, please make descriptions. So looking at journal entries, there's only 13 journal entries in chapter 3. You could add more because the example of prepaid insurance could also apply to prepaid rent, that sort of thing. But in general, there's just pretty straightforward journal entries. Okay. Now, when you make a journal entry, always put the debit first. So in this example, cash is first because it's debited. But down here, cash is second because it's credited. So list your debits first, then your credits. Down here, supplies is debited, and then cash and accounts payable are credited. Okay. Be sure to put the date on your journal entries, etc. Okay. As far as, where did I put? Here we go. Okay. When you're doing your statements, now you don't need dollar signs here. I should take that off. You need dollar signs at the top and dollar signs every time you do a subtotal. Okay. So top and bottom. Now, expenses are subtracted. That is true, but we don't put parentheses around the operating expenses. Okay. So we just know that we subtract them. It's not really mathematically logical, but that's how we do it in accounting. We add revenue and we subtract expenses. When we get down to retained earnings, we do show the negative here with the brackets because we've got a column of numbers where beginning balance of retained earnings plus net income less dividends. So we've got a jumble. So we've got to segregate which is added and subtracted. Sometimes it's net loss for the year, so that would be a negative. Okay. And retained earnings can end up being negative. All right. When you get down here, I want to make sure you put the title, property, plant, and equipment. Put your subtotal. If you have current liabilities, put that title there as well. Okay. I didn't do a good job here because I was following the format for chapter 1, but use the format for chapter 2, classified balance sheet. Okay. And this is a better format to use. Little big company. Here we go. So assets, current assets, subtotal, property, plant, and equipment, subtotal, total assets. Liabilities, current liabilities. In this example, we didn't have long-term liabilities. That's okay. So we just go straight to total, stockholders' equity, total, and so forth. So typically on balance sheets, students lose points because they don't do a subtotal for Um, Property, plant, and equipment, current liabilities, total liabilities, stockholders' equity. So the way I grade balance sheets is it's a point off every time you miss something, but I do give partial credit. Okay. All right. Let's see what else.
You only have to take a subtotal if there's multiple, right?
That's correct. Yeah. So if you had property, plant, and equipment, your title, equipment, and well, that's a bad example because we always have accumulated depreciation, but let's say you just bought it. You'd have equipment and that 19 would come over here. It wouldn't be indented. It's indented here for the subtotal.
Got it.
Okay. All right. And then we have a lot of algebra problems. Let's see if we can get this to do something. Here we go. So you have different kinds of algebra problems, and it's just kind of testing whether you really understand the accounting equation. Okay. Okay, we've got about 11 more minutes. Let's see if we got this. And solutions shown here. Okay. I think that's it. So chapter 1 talked about the general overview of the statements. Chapter 2 was more classified balance sheet. There's not going to be any theory on the exam this time. And chapter 3, you really get into what is a business transaction. That's kind of why we did Monopoly. Did that whole from log sheet to journal entry to T accounts to trial balance to statements, all of that. So that hopefully will help you with the exam. For your trial balance, I didn't put one on the practice exam, but know how they work and how it's ordered. Know how to calculate T account ending balances, all of that. All right. Know your normal balances. And I think that's it. What else can I tell you? Let me go to Monopoly. I'm gonna look at the I'm gonna look at your grades, which is why I'm not sharing anymore. And let's just see what you guys got for feedback. Things that to work on. And I'm definitely not sharing because I'm going to be looking at grades right now. Okay. I'm not sharing. Okay. Do not put expenses as negative, missing titles for property, plant, and equipment. Um, don't make up weird accounts. In the Monopoly, I gave you a list of accounts to use, and some people invented new account titles. Don't do that. Try to stick with what you have learned. Um, let's see. That one got a 15. That one did really well. Um, a lot of you did well. Let's see. Knowing when to use miscellaneous revenue if you have some unusual item that increases cash and just money that came in. Something to be mindful of is just there's so many numbers floating around. Just be really aware that you want to double check your numbers, especially if there's a calculation. And make sure on your statements to put, I'm just reading my comments on the Monopoly. Make sure to put titles on your statements and dates, proper dates. Remember that income statement is for the period ending, whatever the date is, retained earnings for the period ending, whatever date it is, and the balance sheet is as of the period, the date. It's a point in time. Balance sheet is at a point in time. Income statement is for a period of time. Okay. Don't show expenses as negative. Several of you wanted to do that. I mean, it's just human nature. You're subtracting them. And missing property, plant, and equipment on the balance sheet. Let's see. Don't make up account titles. And I think we got most of the comments. Let's see. Oh, make sure if there's more than one revenue account that you do a total revenue and you do a total expense accounts. Um, we want to know what those all are. And when we use the equipment account, that's an asset account. So we want to make sure we don't call it equipment expense. There is no equipment expense account. It's just equipment. Now, when we do current assets, when we calculate current ratio, can you guys put in the chat what that formula is? Brennan, you are correct. For trial balance, the order is assets, liabilities, stockholders' equity, revenue, expenses. Checking I have this right. You have this right. There was also EPS and total liabilities to assets ratio. That's right. EPS, those are correct. Current assets divided by current liabilities. So that is not total assets. Current assets are higher up because you also have property, plant, and equipment and intangible assets. And before that, long-term investments. So you have current assets, long-term investments, property, plant, and equipment, intangible assets in that order. So yeah. So when you're calculating current ratio, use the right numbers. And let's see. I'm just seeing if there's anything else. I'm up to the P's. Oh, on a trial balance or on a balance sheet, if an account has a zero balance, we don't list it. And let's see. So total debt to assets ratio, that's a great ratio because it tells you how to do it. Debt means total liabilities. If it were current liabilities, they have to tell you. Debt to total assets. So debt, total liabilities divided by total assets. EPS, earnings per share. Earnings is another word for net income. Per share, you do have to average the beginning and ending balance in number of shares to get that average shares. All right. Lots on property, plant, and equipment. Let's see. Almost there. I think we got most of them. Okay, what else? Current assets, you guys got that right. Any other areas of concern on the homework that you didn't understand, or if there was a solution?
I have a quick clarifying question on something you just said.
Hmm?
So if something has a zero balance for like, let's say, I guess it's really unlikely, but like a company has zero revenue on an income statement, would we not include revenue? It would just be expenses in the very unlikely case a company had zero total revenue.
Well, that happens with startup companies, right? Because they haven't even made their first sale. So
Sure.
you would have zero revenue, a whole bunch of expenses, and a big fat loss. Yeah. Yeah.
So would we list total revenue as zero in a case like that, or does that zero balance really typically just go for the trial balance and balance sheet?
Wow, that's a great question. I think you'd have a spot for revenues and just have a line there in the statement on the income on the
Okay.
trial balance. You wouldn't have anything. Yeah.
Okay. I guess a more likely would be for the retained earnings. If a company didn't pay dividends, would we just uh would we still want to say less dividends and then just do a slash or zero, or would we just not even need to show that they didn't pay dividends?
You would show it. Let's do that. So we're mainly talking about the trial balance, but let's do that. Okay. So if you had So trial balance only list if an account has a balance. Income statement, same, except if revenue is zero. You should note that. That's a very unusual situation, but it does happen. Retained earnings, show all 4 lines because I want to know that you know it belongs there. Okay. So the 4 lines are beginning balance plus net income or minus net loss minus dividends equals ending balance. Okay. So if you had a beginning balance of whatever, like in Monopoly, our beginning balance was 0 because we just opened the business. But in the practice exam, the beginning balance was 5,000. So we know it wasn't the first month of business. Yes, beginning balance is whatever's on the trial balance. So, and I want to talk more about that in just a second. I got a couple more minutes. So then you say, oh, we had net income of 1,200, but we paid dividends of 500, and our ending balance is 5,000, I hope 700, something like that. Okay, so I want to go back to this. So see here how we had a beginning balance of 5,000. So I think I have that. Yeah. Okay. So in chapter 4, we're going to do something called closing the books. But until then, we have a trial balance and it has all the activity, and you can see the trial balance, unless it's scrambled, is going to be listed in the proper order. Asset, 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 liability, liability, stockholders' equity section, revenue, and then expenses, okay? Only the accounts with balances. So here we have retained earnings with a $5,000 normal balance, credit balance. Okay. We still have revenue, we still have expense, we still have dividends, and that's going to impact retained earnings ending balance. So this is beginning balance. Okay. So we come down here, and now we're going to update on the balance sheet. So that is why we do this in the order. Income statement first, then we get net income. Why? We need net income to complete retained earnings. So that 119 comes down here. And then we get the updated ending balance for retained earnings. And there it is right down there. Okay. So that trial balance is the beginning balance because retained earnings is updated. How? Retained earnings is increased with revenue, decreased with expenses, decreased with dividends. And where do we get that information? We get it off of the trial balance. So everything below retained earnings ends up going into the retained earnings statement. Okay, through net income and dividends. Okay. All right. Well, I hope this helps. And let me know if you have any other questions. And let's really hope that we don't have a snow day tomorrow, because that would be a bummer. So, anything else?
I'm good. Thank you.